You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Morgan, publisher of the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Jim, it's great to be with you. Thanks.
The last time we chatted, you said we were at a critical point in the financial situation that we're in. Can you maybe expand on that?
Well, we're in a place where, almost all of our listeners know that, there's never been a fiat money experiment that hasn't ended badly, and this one has been prolonged for quite some time. And we had a financial crisis in 2008, and I'm of the view, as are many others outside the mainstream financial press or mainstream press, that think that it really hasn't had a recovery since that time, and things are starting to unravel a bit further and faster now with the currency crisis that's going on with the ruble, for example, what's going on in Greece, even though, so far they've kissed and made up and they're going to get an extension. But nonetheless, things are starting to unravel. So my perspective, and many others that study this objectively, are looking at a currency situation that cannot last a whole lot longer.
Now, the U.S. dollar keeps climbing, everybody else falling to the wayside. Is that going to end anytime soon?
Well, yes. I don't know soon is the right word. It might not end soon, but it will end. And as we discussed previously on your show, Jim, is that the dollar is perceived to be about the safest investment you can make. And relative to other currencies, that's probably true. But relative to the ultimate currency, gold and silver to some degree, it's not true. And that's why you see gold rising in U.S. dollar terms, even though in dollar terms the dollar index is beating every other currency currently. So that's the explanation. The really smart money's moving into gold as most others are moving into the U.S. dollar.
The price of gold has remained steady. Is it a good investment right now? Is it going to rise soon?
Gold is always a good investment, but the problem is, people buy it high or whatever. I mean, gold at 1900 was really a good investment. However, you'd much rather buy it at 1200 or under 1200 or much earlier when the cycle began at 250 or 300. I understand all of that. The point I'm making about it being a good investment, almost always, I should say, is because of its purpose. And its purpose is contra to all other asset classes. It's the only one outside the mainstream financial system altogether that has no counterparty risk whatsoever. So because of that fact, and you understand what gold is, you understand what it does, and you understand the purpose of owning it, then owning the correct amount, which for most people is 10% or less, buying it almost any time is not a bad idea. And just to elaborate a bit, if you bought gold at 1900, and of course today it's at 12, you probably would be upset. But if you only allocated 10% of your portfolio to gold, you made that purchase at the high, and you're sitting on it, 90% of your assets would be somewhere else. And so you really wouldn't be able to beat yourself up very much. I mean, you could, but if all you focused on was 10% of your portfolio and how bad it was doing, then, why are you doing that? You've got 90% allocated somewhere else. So that's the point I wanted to make. A lot of people in the gold silver community think that that's the only asset class to be in. And that is a personal decision. I mean, there are people that truly believe that, and that's what they've done. I certainly am well above the recommended amount, but it's my life's work. I mean, I've made a big bet on the silver and gold markets, but that's my choice. I understand it, and I'm not going to complain, when the price goes up or down. I'm here for the long term and still believe I'm right. And of course, let's face it, the honest truth is I bought a great deal at very, very low prices. So I could certainly weather the storm better than someone that bought, let's say a few years back at a, much higher price.
The Chinese currency trading centers in Canada are about to open up. Is that a comment on the value of the U.S. dollar?
I think it is, Jim. It's, hard to comment exactly, but I would say yes.
And one thing that we wanted to know is the decline in base metal prices reflection in silver production as well?
Absolutely. 70% comes as a result of base metal mining, and 25% of that is copper mining alone. Copper has been showing weakness, along with some of the other base metals. I mean, I just read something today briefly, I haven't studied it yet, on the nickel supply being rather large. So yes, these over supplies, we could call it in quotation marks, oversupplies, will curtail, the amount of mining of some of those base metals, which directly plays into the silver market. So actually it's a bullish for silver if you have less copper, zinc, and lead mining, or even less gold mining. All those are favorable to silver because it means less silver coming above ground.
I know zinc isn't exactly a sexy metal, but it's very necessary if you're going to galvanize metal or if you're going to build a battery. What's going to happen with zinc prices? I understand the major mines are going to be shutting down.
Yeah, we did a zinc study quite some time ago, meaning about 2 years ago, and we were, in front of some of the bank studies that came out later, but really, zinc is one of the base metals that we're very favorable toward because of what you just said. We are looking to see a substantial decline in zinc over the next couple of years, and that shortfall will have to be made up by new mine activity. So we're favorable on zinc still.
We'll have more with David Morgan and his brand new book, The Silver Manifesto.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to David Morgan, publisher of the Morgan Report, and also the author of a brand new book. Can you maybe tell us about the Silver Manifesto and why you wrote it and why people should be so interested in it?
Well, I wrote it because, it's been one of my, life's dreams. I don't want to exaggerate it, but really a goal of mine to have a book on silver that I felt would be somewhat timeless and also cover the complete gamut of not only silver, but why silver as much or maybe more so than gold, why you would do it based on economics using the Austrian school, or what I consider to be the most realistic outlook of how the economy really works, how fractional reserve banking works, how fractional reserve bullion banking works, what the manipulation story truly is, the history of silver in the monetary system, and just about every aspect you could look at: silver as an industrial use, silver as a monetary use. And then I have a chapter called Beyond Silver that outlines, where we are in the market cycle, where I think we're going to go, how we could exit, and looking forward beyond silver as money, if it will ever be reinstituted as money or not, remains to be determined. I'm of the opinion it probably won't, but gold could be, although it's possible. So basically it was, from A to Z. I mean, it was the alpha to omega from my perspective of the silver market. I covered the gamut, and I'm sure I'll get feedback, both positive and negative, but certainly 9 months worth of effort went into this book. And, the critiques that we're going to get that are constructive would only sharpen the sword and make me want to maybe do a revision later on in, say, a couple of years and make it even better. So certainly this is the best effort so far. Not that it couldn't be improved, but this is everything that I think is succinct, without being a huge academic read, that the average investor would be able to learn from and pay attention to and benefit from. And the silver aficionado would also feel pleased reading this book. That's the way I see it. We'll let the marketplace determine what it really thinks about it.
Solar energy is growing by leaps and bounds. Silver is a very necessary component for that, for the mirrors that you need to have, and also to collect the energy generated by solar power. What do you think that's going to do to silver prices in both the near and long term?
Jim, I want to comment first on what you said, and make a slight adjustment. Solar has grown, as you said, by leaps and bounds, and has grown substantially, remarkably, but not on the projected line that I put into the silver over the next decade that I wrote in 2010. So it's 5 years from then. If you look back from 2010 to, say, 2013, it was on that extremely robust growth curve. And the last couple of years, it's fallen away from that curve. So it's not been as robust as expected at this point in time. However, the margins have gotten squeezed, meaning you're getting more value per unit of silver energy produced. So I probably didn't say that very well. You're using less silver and getting out more energy out of the panels, so that means they're more efficient. So that's a good thing, especially for the buyer of solar energy. And there's kind of a push going towards solar again by certain areas, such as China and India. So certainly it's a very important part of the story. I just want to be very clear because I try to be objective in this market. I can't. I mean, I am biased toward being favorable to silver in all aspects. But nonetheless, the truth is that it had an extremely robust growth curve for about 3 years. It's fallen away from that curve for a while. Will it reassert and get to the 130 million ounces a year on an annual basis? Probably not. But we're at about 70 million ounces on an annual basis right now, and I think we can maintain that or probably go up from that level slightly, meaning, maybe to 80 or 90 over several years. And, of course, depends on several things. Depends on what oil does in the long term, and it depends on what energy demands are and how efficient solar panels, eventually become. So there are variables in there, and, of course, I'm very aware of them. But solar is, of course, a big player.
Some gold companies that were in the red recently now say they're back into profitable territory. They're producing more gold, and I'm wondering if lower energy prices have helped them do that.
Yes, a general rule of thumb is that about 25% of the costs are energy related for mining. And again, it's a rule of thumb. Each mine is different. Some would be more, some would be less, but it's a good way to get a handle on it. So, just think of any business that you're running. If 25% of the costs of that business drops by more than half, you have got a big savings. And that means that your product, whatever you're producing, in the case of a gold mining company, obviously gold, that's going to be a big help to the bottom line. So you're spot on, Jim, and thanks for bringing that to everyone's attention. Of course, I'm aware of it, maybe haven't addressed it often enough, but it's something that our listeners probably know, but can reaffirm. Most of them may not know the level. In other words, a lot of people may not know. 25% is a good rule of thumb as far as how much costs. I mean, that shows you how energy intensive the mining industry really is.
And of course, too, with gold and silver prices maintaining basically, I think, at the cost of production, the more efficient you can make your production, the more money you might make.
Absolutely. It's all about margins. It's all about increasing your margins. It's all about how you can make your business more efficient and, pay out less and collect more. And, gold mining industry, like many industries, is really competitive. I mean, it truly is. And of course, I wouldn't want to be the CEO of a large gold mining company such as a Newmont. No offense against Newmont. It's actually a decent company. We've had it on the list before. But when you've got a company that demands that kind of output, it's difficult to maintain because all gold mines end in failure. You could have one of the richest gold mines on the planet, but eventually you're going to get out that last scoop of that last ore that's economic, and then you close the mine down. It's a depleting asset, in other words, just like an oil well. And because of that fact, to stay in business, you've got to go find another deposit and another deposit and another deposit. Well, the bigger your output, that means the more demand you have to find large deposits. And there aren't that many large deposits anymore. So, you're actually better off, in my strong view and studied opinion, to be like in the mid-tier category and not get too big. I mean, really the best model these days, without a doubt, is the streaming model. And that's, of course, where we focus most of our attention because we work for our subscribers. We work for our members. We work for the people that want to make money in this sector. And, I'm favorable to the people that are, metal heads only. I know I don't want to invest in mining. I only want to invest in the real metal. But think about it. You've already invested in mining. If there wasn't a gold mine or a silver mine, you wouldn't have the final product. So, I mean, we all have something at stake in the mining industry, whether you recognize it or not, because without it being mined, you're not going to get a final product. So I think that's something that a lot of people actually overlook because it's really imperative that somebody's getting these mines into production and profitable, or else there isn't going to be an end product.
With the prices, again, near the cost of production, is anybody doing major exploration, or are they just staying pat and waiting until prices go up?
Well, I think it depends. I mean, I think there's some that are standing pat and waiting for prices to go up, and there's others that are more aggressive. I mean, there's some that have more aggressive, let's say, strategies. I'll put that in the quotation marks because it depends who we're talking with. I don't want to use names, but, there's people that actually let's say, do produce the metal, particularly these very large conglomerates that have turned over their trading activities to people that are very savvy at, let's say, playing the markets. And so they really don't care so much about what the true costs are to them, because they're doing much, much better by picking the pockets of the small investors that think that they know what they're doing in the futures markets. So I think I've said enough, but I think it gives a good idea of how you have to kind of examine on a case-by-case basis, because certainly there are some that are, straight up and hedge, let's say, what I would consider to be legitimately, and there are others that, let's say, play music at a fine tune that absolutely works in their favor almost always.
Some people have said we live in a time where we've never seen so much manipulation in the markets, and I think they're talking about the equity markets. But what about the gold and silver markets? Same thing there?
That is a tough call, because, I'm sure there's many of my contemporaries who say, oh, David, why would you even stall on that question? You have to say yes. But I don't know. I've spent, as you know, Jim, most of my life studying economics, finance, but particularly the metals markets. And if you go back into like the Hunt brothers story and you see what was going on with the CFTC and one of the biggest let's say employees of the CFTC and what he was doing, he had a direct conflict of interest, a huge one. And what they did in that market and how they did it and how they treated the Hunts and what they, I don't know. From my perspective, I'd say no. I would say, this is my opinion. This is not a fact, and I don't think it can be proven. But you want my opinion, somebody studied this market from the time they were a kid till now, I'd say the last time was actually more of a manipulation than it is this time, and this time it's pretty horrid. It's manipulated more ways. It's manipulated more sophisticated ways. There wasn't all these trading algorithms and all these bullion banks and that type of thing back in the day, meaning back in the first bull market. But as far as outright manipulation and conflict of interest in making the market go the way you want when you're losing because you're a sore loser, I don't know. I'd say the first time around was probably as bad or more blatant than this one, even though, again, I want to be clear that there's certainly more ways and more tactics and more, let's say, entities through exchange-traded funds, over the derivative markets, over-the-counter markets, options on futures. On and on it goes. Certainly it's a labyrinth of ways to control markets. But that's not my point. My point is, you asked me, is it as manipulated or more? And I'd say, I am not sure of that answer.
Your book, The Silver Manifesto, does it give people any ideas or clues about the future of the precious metals, especially silver, of course?
Absolutely. Again, now here's where my bias comes in, so I'll just tell everybody, and there's people that certainly are not fond of me anymore, or maybe never were, but if you read the back cover, it says this may be the most important hard money book to be published in quite some time. Fortunes have been made by those who bought silver around the $5 level and paid attention to the call of the top at over $48 by David Morgan. And let me pause there. I did call the top at 48. I did hedge my position, and there are people that are well known in the community that I will not name that basically retired early because of that call. Now, that doesn't mean I got it right for everybody every time, but a fact is a fact. So let me move on. Yet the big money lies ahead. According to the authors, as perhaps as much as 90% of the move occurs within the last 10% of the time. Of course, past performance doesn't guarantee future results. Yet in the last bull market, silver gained over 800% in 1 year, from January 1979 to January 1980, dwarfing the gains made from 1964 to 1979, the previous 15 years. So in 15 years, you made some decent gains, but in that 1 year, you made over 800%. And is the market going to repeat? Is it going to do that again, Jim? I don't know. What I do know is how markets move. And what I do know about market movement is once they get going, they go into the exuberant phase. They go into what, our friend Alan Greenspan called irrational exuberance. It goes into a manic phase. It goes into a panic phase. It goes into delusional situations. And there's a small market out there called silver that's the little brother of gold. So when this thing breaks loose, and when it breaks loose, I think you could see silver do a performance that few really believe at this point in time, with the prices being, so low for so long. It seems like it's almost impossible for that to happen. But having gone through one bull market and lived through it, the pain and the agony, the pain of defeat, let's say, only to come out the other side and be in that market in that last year when it went up 800%. That's pretty exciting. I was there. I did it. And let me tell you, I was pretty exciting to be going to work and making more money in one day, than I was making in my job in 1 month. That was something that, for a guy in his 20s was pretty exciting at the time.
When we do start to see a big push in the prices of gold and silver, who's going to rise first and who's going to go the fastest?
Good question. Usually I think we'll see gold lead for a while, but there'll be a point where silver will take over and you'll see the gold-silver ratio diminish. So you'll go from like 70-1 to 60-1 to 50-1 to 41 to 30-1. And I am projecting we could get down to what I call the monetary ratio of 16-1. That's not the in-the-ground ratio that some of my contemporaries insist is. It's not. The in-ground ratio is roughly 10-1. And I think we could get to that level, even the in-ground ratio, the way it's naturally occurring in the earth, and that's about a 10-1 ratio. So certainly if you agree with me, and this is, again, what I project, but doesn't guarantee it, you would see a 70-1 ratio go to, say, a 10-1 ratio if that were true. And I say if that were true, that would imply that silver would outperform gold 7 times as well. Now, that's quite a move, and I'm not saying it'll do that. What I'm trying to convey, and to be a little more accurate and a little bit less, let's say, hypey about it, I think it'll at least double or triple the performance of gold. So if gold triples, expect silver to do, maybe 9-fold or 6-fold, conservatively. So it doesn't mean you should be in all silver. It's certainly more volatile. It's harder market to analyze. It's tougher to get the bottoms right. Certainly I've been lucky getting all the tops, but I certainly haven't done the greatest on getting the bottoms. But, I have to defend myself somewhat. I mean, I gave everybody that wanted to listen for free, that paid attention, as someone that's really got an open mind and an open heart toward everybody and trying to help them. I know the 4th rule of silver investing talks about writing it out for the long term and dollar cost averaging, and why that discipline will serve you very, very well. But most people make up their own minds, and that's fine. I'm all about free market, but I don't like to be blamed for me telling everybody jump in now. This is it. This is the absolute best. I mean, when I trade, and anyone that's on the member service knows the facts, and the way I trade is very, very protective of them. Very protective of your capital, and it's a very disciplined approach. And anyone that knows the facts certainly wouldn't criticize me. In fact, I get mostly accolades for the way that I trade. Not that I don't take losses, but the losses are measured. They're small. They're very deliberate, and they don't get anybody in trouble. So I'll leave it at that.
David, if someone wanted to get a copy of your book, how can they do so?
Well, right now we're doing pre-orders, and that is at thesilvermanifesto.com, and that website will stay open for quite some time. Amazon should have it in about a week and a half. So my suggestion is, if you're anxious to get the book, just wait about a week. Let's see, what would that be? Sometime near the end of the month, let's say from the 24th or 5th of February. And that way you'll probably get it faster than if you order it from us, because, we've got things to do besides put books in envelopes, address them, and take them to the post office. And we will, of course. But Amazon, that's their, part of their whole gig is, efficiency and mailing things out to the public. Jump on it right now. If not, just wait for a week and order it from Amazon. They'll have the book by then.
David, thank you very much for chatting with us.
My pleasure. Thank you, Jim.
My guest has been David Morgan, publisher of The Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com Radio. Find us on Twitter or Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.